Which is why we want to focus on rates, Jay, because Federal Reserve Governor Philip Jefferson and Philadelphia Federal Reserve President Patrick Harker both said that the central bank could take a pause at the next policy meeting, which of course is June 13th and June 14th. The Fed Beige Book showed the U.S. economy seeing signs of cooling in recent weeks, hiring and inflation easing slightly. This plays into what the Fed is trying to do here with these 10 rate hikes. Your thoughts on the June meeting and whether or not the Fed is in fact done?
Well, you're right, Maria. Yesterday was a huge inflection, because particularly Jefferson is now going to be vice chair, so probably Powell's using him to signal. And it's a very close call. We count 7 doves and 5 hawks on the voting members, but we do think they'll pause. That's what they should do, because really inflation's rapidly decelerating. And the data I would focus on is we're going to have some of the biggest roll downs of inflation in history, because inflation peaked in May and June. We're running at almost an unimaginable 12% annualized. So we're going to roll those off. So even this Federal Reserve, which is very backward focused, at least a year of latency, will realize that inflation is decelerating.
So we've got the CPI number comes out the day before we hear from the Fed.
Right.
So we'll see another good number, you're saying?
Well, the actual month might be volatile because of volatile components, but the roll down will be almost 0.8. Because we're dropping off a 1.2 or 1.1, and we'll substitute in a 0.3. So that last 12-month number, in fact, that's going to drop to 3.5 most likely before the July meeting. So the Fed will start to have to focus on this lagging data and see that really inflation peaked in July of last year. We have data that supports that.
So what does that mean in terms of allocating capital from your standpoint? Do you want to go with what JC's talking about, the best stocks? Do you want to try to find where value is right now? What are you doing?
Well, we've been encouraged, even recently, some of the more value-oriented stocks, particularly preferred stocks, that were outperforming yesterday. But we think for certain by July, you'll get a broader rally. The banking crisis really threw us off. That's when this extreme divergence really occurred. And when we get into July and see that earnings are pretty strong, the Fed is on hold, we think that sets us up for a power rally where we get to our target, which is 4,500, and probably exceed it later in the year on an AI boom.
So look for value. Go broader than just tech.
Right. I mean, maybe not this day, but certainly by mid-July.
JC, that's your plan too?
Yeah, I mean, listen, we've been riding the wave with these strong stocks, the Apples, Googles, Tesla, Meta, these are the trades that have been working this year the best. I think if this bull market is going to continue, you need to see some sort of rotation. It doesn't necessarily mean that these tech stocks needs to fall apart, but we really want to see a bit in industrials. And by the way, we're making that bet. We've been buying Caterpillar and industrials and small caps down here. So we are actually making the bet. We're diversifying away from the big winners. Instead of pressing them now after these big moves, we're betting on that rotation. We're going to know soon. I like his call with July. I don't know if it's going to be June or July, but I'm with you. If we're going to see it, we're going to see it soon. You have a call 4,500 on the S&P. I don't disagree with that at all. On its way to 5,000, right? I think that stocks are going higher, and until proven otherwise, that continues to be the bet.
Does that change if we hit a recession?
Definitely, although the data to focus on there is construction. So we have 7.9 million construction jobs. That's the highest ever. And in the last recession, the Great Recession, we lost 2.5 million of those jobs, but it looks like we're going to power through.
Okay.
Strong housing and also the infrastructure spending that's coming out of the government.
Well, Macy's is cutting guidance for 2023 right now. The consumer is showing signs of stress. Your thoughts?
Maria, again, the stock market is a discounting mechanism. They just announced Germany's in a recession. Germany's making new all-time highs in the stock market, right? So for us as investors, we're less worried about the economic implications of asset prices moving and more so on the direction of those asset prices.
All right, we will leave it there. JC, great to see you. Jay, great to see you. Thank you so much, gentlemen. Great word on Wall Street.